Okay, good morning everybody. Thanks for attending. Thank you to Daniel, thanks to Shares Magazine and Sencos for the opportunity to present. Can I introduce you this morning to KBC, Advanced Technologies. I recently became CEO in January after spending 4 years in the business as the Managing Director of the technology software business. And in that time we've grown software revenues dramatically, and that will give you a hint as to the strategy of the company we'll come back to towards the end of this session. KBC doesn't mean anything other than the initial founders of the company, Gregorian, Bryce and Close. Been around for 37 years in what is a very interesting industry today, the oil and gas industry. I'm sure if we had a question session in this, the first question, and perhaps the only question everybody would ask is oil price and health of KBC. We'll answer it in the presentation. And as Daniel said, you're very welcome to come and see myself or my colleague Jason at the stand right by the front door on the way in. In fact, we welcome that and show you some of our technology while we're at it. Okay. KBC's corporate profile. First and foremost, profit improvement in the hydrocarbon industry. We work in upstream oil and gas, midstream gas processing, downstream refining, downstream petrochemicals, which is a little bit of a natural hedge. When upstream is struggling, refining tends to do better, or petrochemicals right now, for instance, doing very well, and vice versa. So the oil industry is a complex supply chain, and one person's problem is another person's gain. And KBC is very flexible. We're about 350 people, of which 200 or so, including myself, are chartered chemical engineers, process engineers, mechanical engineers, and we help the oil companies in time of distress. And as you've seen in the newspapers, this is definitely a time of distress in the oil industry. Established in 1979, we have 10 geomarkets around the world and 3 hubs, Singapore, Houston and London. And that's important. You need a geographical reach in the oil industry to service those customers in their native languages, in their native countries, at the native refineries and gas plants. Our strategy has been to move from our core DNA in downstream, in refining and petrochemicals, consulting and software, and to move slowly but surely into upstream to give ourselves a breadth across the hydrocarbon business. The upstream industry is bigger, and our skills in refining are directly applicable. And we're also on a journey to become more of a technology, more of a software and knowledge management company from the pure consulting roots that we had from our start when KB&C left Exxon in 1979. To that end, in the last couple of years, we've acquired a number of upstream software technology companies. FISA in 2014 from Farnborough and Infochem in 2012 from Central London. Both of those brought upstream simulation engineering technology to us that supplemented our own downstream technology and helped us move into upstream. And if you read our trading update from 2 weeks ago, you'll see that we mentioned that FISA itself had a record year. Well integrated into KBC and helped us push more into upstream. And yes, there is life in upstream. We'll talk about it in a few moments. Our global client base, as you could imagine, working in this industry is very broad. It's from second-tier independent refiners like Tesoro and Irving and Valero in the US. They're doing very well at the moment, down to the national oil companies in Petroecuador. We announced a $100 million 4-year project with Petroecuador in 2012, and you'll see we announced another big follow-on South American consulting and technology contract in November with a backdrop of chaos in the oil industry, and that one was 48 million. So a couple of record large deals, as well as a software deal driven by FISA we announced in November with a oilfield service company. So far KBC doing very well. 2014 a solid year. We'll talk about finances more towards the end. And it's really driven by finding the right clients in this client base that need our consulting, need our knowledge, and can use our technology, software technology, and combining all of those things together. The market itself, around about 700 billion, probably a bit less than that this year, probably 650 billion in terms of capex in upstream with all the cutbacks that's going on at the moment. And about 70, perhaps a little bit more, maybe 75 billion spent in refining this year. And you can see why we are attempting to move from the refining market into the upstream market, which is 10 times bigger, and being able to operate within that supply chain. If you can optimize a refinery and refinery optimization skills have been in place for 30 years, we can bring a lot of that into the new frontier in upstream. And right now today, upstream's got to get its cost base down. We're seeing the first wave of that. The second wave will be around the deployment of technology. The drilling boom of the last 5 years is over for now. They need to get the maximum they can out of their plants and the assets they have. And that's a skill that we've developed in refining for a long time now. In terms of our offerings, really it sits into 3 areas. The software technology over the last 10 years in particular has grown from strength to strength. We announced a record year in 2014 for technology, and that's a trajectory we're on. I'm a software guy from the industry. I've been made CEO. That tells you a story about our strategy in terms of both technology and upstream. Our consulting business has really 2 strands to it. The technical side of consulting, which is the steel, how the steel operates, how the distillation columns operate, how the North Sea oil platforms operate, and then the people, business transformation. How do we get the most out of the people operating the steel? And what we've found over the last 37 years is if you combine all 3 of those aspects, the software technology, the engineering flight simulators, together with the technical consulting of how the engineering works, and then you train the people and build the organizations to run it, you sell bigger contracts. Bigger contracts contain more technology at higher margin, and they contain better utilization and leverage on the consulting. In other words, drive profitability. So KBC, over the years, we've built from our technical base, our skill, our DNA is the middle bit, technical process consulting. We've added on software at a higher margin, and we've cemented it in with the business transformation type skills. We bought a management consultancy in energy in Denver just over 10 years ago. And really it's the combination of those 3 things that's led us to be able to do the Petroecuador $100 million contract that we announced recently. Let's get on to the oil price question. There are pros and cons. The oil price is it's up this morning. It's just over $50, so we're going to celebrate that for one small moment or two. It's obviously been a rapid decline from over 100 down to 50, and that's sent the oil industry into some chaos in different parts of the world. Chaos tends to be good for a company like us because we can help out in that region, but it would be naive to say that it may or may not affect KBC. It's difficult to predict. We've got US refiners like Valero doing very well. We've got national oil companies struggling. It all depends on where your plants are in the supply chain, what your oil supply is locally. Shale oil has been produced at $10 a barrel. If you're near it in West Texas, it's got nothing to do with the oil price. They've been operating at $10 a barrel for a long time. So it all depends on where you are in that supply chain. Petrochemicals starting to go, you can see a boom beginning in petrochemicals. So, of course, though, you're going to get supply chain freeze-ups. Nobody wastes a crisis, and oil company supply chains are not going to do that. So we're going to get pressured on pricing as well as be able to find advantages in operating plants and optimizing them. I think it's really personally down to us, KBC, how flexible we are, how fast we can move to the sector of the market that needs us, and that's something we've learned to do and something we're very focused on at the moment as a management team. 2014 was solid, good momentum into 2015. We'll leave it there. If you've got specific questions on oil price, please come see us today and we can talk about it at the stand. Okay? I wanted to mention, just before we finish, a few notes on our flagship product. It's called PetroSim. You'll see in the trading statement a few weeks ago that it's made record revenues. It's surpassed the targets that we set. It's doing very well. What is it? It's a flight simulator for a refinery. It says if you put this crude oil in, this is what comes out the other end, given the equipment you've got. If you put this kind of oil into an offshore platform, this comes out the end. Should I produce it with a ship or a fixed platform? And if you think about what's going on in the industry right now, those questions are very important. There's lots of supply of crude in the market. I could take Canadian heavy oil, I could take light shale, paraffinic shale from the West Texas, or I could get some stuff out of Vietnam. So refineries have got a choice of what they process. And that's an economic decision, but it's also a technical decision on can my refinery process that type of crude. Paraffins out of shale oil are very bad for reactor units in refining. You've got to have the right setup, and that's what KBC does. Advises on which crude to process where, and we're seeing that crude compatibility work very strong at the moment. It's driven by our technology. of being able to model what goes in, what goes out. Designed for the real world, it's been in production for about 30 years. It's got all of KBC's knowledge built into it. And again, we've built ourselves up over the last 4 years in particular to service that software industry and be much more of a software and technology player supported by high-end consulting, which is quite a unique business model in our consulting sector of the market. Do you mind taking a slide on one? The clicker is packed up on me. You'll see on the next slide when it comes up that we have a number of technology R&D centres. It's important in the oil industry to be able to support the local types of crude, the local types of oil companies. We're based in Calgary, a fabulous city. I lived in it for 10 years in North America. Significantly colder and easier to deal with snow than London, but very important because of heavy oil there. You can't be in the oil industry without having a significant presence in Houston, and our refinery reactor technology is developed in Houston. And then we've acquired a number of technologies, as we've said, from basically spin-offs from UK universities, UMIST, Manchester, Imperial, supplying Farnborough and London for us, and upstream technologies. So a strong set of technologies for the oil industry worldwide. This is Petrosim. If you come to the stand, we'll show it to you working. That's Petrosim working on an upstream offshore compression system. This thing up here, if you can see it, is essentially a compressor. If you fly on an aeroplane and you look out the window on the wing, you'll see one. It's a Rolls-Royce RB211, a jet engine, and they sit on offshore platforms compressing the gas to get them to shore. Right now, every single oil company is looking at their platforms to see how can we operate those compressors optimally, safely, with minimum amount of fuel. So cost versus production. It's all about getting profit out of those existing assets. And Petrosim and upstream can do that. And the graph down the bottom is how you would operate over time given what's happening to your reservoir. And if you're not drilling your reservoir, if you're cutting back drilling, infill drilling it's called, if you're cutting that back on the reservoir, you're going to start declining, which means your pressure and flow rate's changing, which means that thing needs to change the way it operates. That's what KBC does. That's what Petrosim does. In downstream, in refining, well, you might be switching crude. If you're switching crude to get a better or cheaper crude, nothing's free in this world, so often a cheaper crude tends to be dirtier. It's got more sulfur in it or more nitrogen in it. And that's great from a processing perspective. It's cheaper, margins going up. But you may damage your equipment, or your equipment may need to come offline quicker for cleaning. And that's Petrosim used in a refinery on something called a distillate hydrotreater, which is processing crude with more sulfur, and the sulfur's clogging up the system. And the temperature's going up on the outlet bed, which is the graph. And when that reaches a certain point, you've got to take it offline and clean it. Takes a month. Refinery's offline for a month. So you need to plan that perfectly. And again, that's what our engineering simulation technology does. Now, armed with that technology, our consulting division's been changing the way it delivers solutions to the market. First and foremost, we've been delivering more software. Secondly, our consulting's been anchored around the technology. It's more scalable. We can use more juniors. We can do more work. We get more leverage, more profitability. So we've really tried to revolutionize KBC over the last few years. Lots of changes to the way we do work. We've been focused very much on driving margins up in our consulting business. Not totally focused on revenue, but focused on margin growth in consulting, and selling as absolutely much technology as we possibly can, to put it in a nutshell. And you'll see on the next slide, on the profit slide, we've done a pretty good job over the last couple of years. Stationary, fairly stagnant, a little bit boring, people might say, in the middle of the recession, 2008s and 9s. The last couple of years, though, some pretty solid growth, well over 8 million in adjusted PBT, beaten target last year in 2013, and we've announced in our trading statement largely in line with management expectations for 2014, which were ahead, of course, of 2013. So please watch out for our results in March when they come up. Again, a solid year for us, and we'll be looking to push forward and making the most out of the chaos in the oil industry if we can. That leaves me just a few seconds to talk about a number of other key points. I'm going to pick one off this slide, which is our cash balance. Net cash, which is the last reported number at the half year, was around about £24.5 million. That gives us a very solid balance sheet. That's a record number of cash for us to see anything through that we may or may not need in this oil industry crisis. So having a strong balance sheet as a consulting and technology company is very strong for us, and it means we're not changing any of the ways or the acceleration of the investments that we're doing in technology and in consulting, and that will stand us in good stead to continue to work with national oil companies where work in progress and WIP levels and debt are always an interesting thing to manage for a company our size. Last slide, why is KBC a good investment? This is my pitch to you. I've said it, a strong balance sheet that allows us to do some things that some other competitors of ours can't do in this market. Solid 2014 performance, which is good for us. That's what we needed. It gives us some momentum in the current market. We absolutely have it. We've published it many times. It's part of the placing, the equity placing we did in May of last year. We have an absolute determination to grow our technology revenues, our pure engineering software revenues, and productizing our consulting knowledge and our consulting IP. Our emphasis is on advanced technology, KBC advanced technology, and we're entering a period now where we're really focusing on that as a solutions company. In doing that, we're very much looking at our consulting business of how we can go from where we started 37 years ago as individual lone traders, to very efficient, very high-tech consulting based around the technology, scalable on the technology. That's quite a culture change for a company like ourselves. And as I said, we've been on that trail for several years now, and you can see the results and judge for yourselves. Of course, we want to help the oil companies get better. And some of them need our services more than others right now, and we're very focused on selling in the right parts of the world. The Middle East, for example, you'll hear us talk about a lot. The Middle East is going through a big phase of investment, regardless of oil price right now. We opened an office in Abu Dhabi. We increased our presence in Kuwait last year, and we're looking at the likes of Oman and Saudi as we go forward. So you'll see us invest in some parts of the world that we think are very important to us. And of course, the other thing we need to do, and I'm very mindful as CEO, is to get fit, personally and for KBC, to ride the wave on the other side. When this oil price goes up, the oil companies will remember their friends, remember who helped them and got them through their problems. We want to ride that wave on the other side. So it's important for us to use this opportunity to move our investments around the world. And then I think the biggest thing is that myself now as CEO and the new management team that we've put in place, very focused on technology, very ambitious around the software side of the company, but not forgetting the heritage of detailed consulting. And with that, I'll end it and invite you to come and see us at the stand at your leisure today. Thank you very much.